the technical analysis of these stocks. This is to inform you, to help you make an informed decision as a stock market analyst. Now, welcome to Clockwise Live. Today we'll be talking about 5 insurance stocks you can invest in 2026, especially in a high interest rates economy. Yes, that's what we're talking about today. Now, and I have my stock market analyst here, and we'll be doing a thorough technical analysis of these names to help you make an informed decision. But before then, we are going to look at the companies that has brought out their earnings report. And the last live, we talked about some companies that brought Group and also FCMB Bank. Now, but with a resounding virtual round of applause, welcome my girls. Welcome. Jubilating around. We are seeing, especially from the NGS group, we've seen an interim dividend of 1.30 kobo, that's 1 naira 3 kobo, and people are actually happy, and there's an increase now when it comes to their investment. Now, what can you say about this report so far?
Okay, so thank you very much. Before I get to the NGX, let's look at FCMB.
Okay.
The FCMB, the reason is because if you look at our point of interest, it's actually the financials. The financials have done very well.
Because of recapitalization and
recapitalization and a few other policies. The interest in the NGX is wrapped around the financials. So we have the tier 1 banks. We have among the tier 1 banks, it's basically Facebook that has released reports. I believe, I said it the last time, I said, I believe that most, even since June, or even May, that the second quarter result will be as good as the first quarter. So you have a very excellent half year report. So we looked at FCMB. FCMB published their results for H1 2026, and it was a blowout. If you look at revenue, the top line did 27.77%, which took it from 529 billion naira to 676 billion.
Okay.
Gross profit also 71.81%. Operating profit 98%. I mean, you can tax 98%. Profit after tax 90% from 73 billion to 139 billion. Total income, company income, you have about 65%. Then you have earnings per share grew by 14%, which took it from the income statement. You can see that these numbers are good. And by the way, I'm just comparing this with what we had in 2020.
And this is a tier 2 bank.
This is a tier 2 bank. But if you look at, apart from the consolidated income statement, we also look at the balance sheet and the cash flow statement. So if you look at that, you realize that what I'm particularly interested in, equity stands at 1.17 trillion naira. So this is a very strong institution. Market capitalization is 791 billion, and book value is 17. Watch this. Book value is 17 naira 82 kobo. Now, if you look at it is trading currently at 12 naira.
Okay.
FCMB, that's about so it's 12 naira. So one of the things you look out for to find out, because we are talking about undervalued stocks here. If the book value, if a bank trades below its book value, that means it is discounted. So that's an investment. And by the way, if you look at this, speaking technically, see what you see here is an inverse head and shoulder pattern. And the PE ratio, important to me, is at 2.84. It currently sits at 2.84. That means you are buying 1 naira of earnings, of FCMB earnings, paying just 2 naira 84.
So what you're trying to say, they're in a very good position.
So this for me is very attractive. 2.84 as a price to earnings ratio. Generally, Nigerian banks are ridiculously undervalued, but this figure here shows a bank that is very undervalued. Now
let's look at NGS Group and before we proceed.
Okay, so the NGS, of course, people are literally talking about the NGS because, again, if you're if you're investing in the stock market, then you should know that every kobo that you spend buying, it actually translates to translates to
They track the whole entire market.
Yeah, I mean, they track not just the entire market, but they make money from every stock that you buy. And so, and by the way, we have seen a serious upsurge in the number of, especially retail traders. We had, I think it's currently sits at 6.6 million. I'm talking about something a couple of years ago, we had only 150,000. Think about that for a second. And then we had a little above 50% of market participants as retail. But now it has moved up to, I think, 85%. So foreign portfolio investors make up only 15% of the NGX. So the NGX is primed to really do well, especially with the Dangote listing. But particularly the revenues were very astounding. The revenue for the NGX, look at it in 2020, and I'm not surprised about it. Like I told you, the volume of traders, people that retail traders most especially, has more than doubled, has more than tripled, as a matter of fact. That's why for second quarter of 2025, the NGX as a company raked in 8.07 billion naira. The last report saw them have about 17.6 billion. That's a 117% increase in terms of top line.
Almost 118%.
Almost 118 because 117.83%. So you look at gross profit was 96%, which took it from 9.8 billion to 19.33 billion. Then the operating profit, this one was very astounding. Astounding because it grew from 4.16 billion to 10.6. That's about 155.18%.
And we are expecting more.
And we, of course, we expect, like I told you, we've seen an uptick and we're expecting more. If you have, I can tell you by the end of next year, we should be having, by the end of next year, we should have more than 20 million Nigerians
from the technical analysis, trading. Is it actually a good time to actually buy?
So, I mean, look at this. If you look at the 52-week high, let's do this. So you get an idea of what we're talking about here. Watch this. Just watch this. What do you see? You can see that it's literally at the bottom of the range. It's at the bottom of the range. So if you look at this, you will see that it's actually at the bottom of the range. It is at the bottom of the 52-week high. No, and the bottom of the 52-week high. And we believe that there's a lot of. If you look, just watch this, and then just for comparison, look at this. Let's go to the all share index, so you see what we're talking about here. Look at the all share index. So you see that the all share index is literally taking out. The talks about the capitalization of the market. So as more people come in to trade in the market, then the accrue for NGX. But before I really let that go, I want to really point at for me the NGX. Something that I'm a little bit that is a little bit concerning about the NGX. I mean, the numbers were very good. If you look at if you look at the let me get the sorry, just a moment.
The
NGX. Sorry, I want to check. Go to the NGX. Okay. Well, I try to pull that. Okay, yeah. This is what I'm looking at. The NGX limited. So I'm gonna, while I try to pull that up, but what I want to say is what is most interesting is the fact that if you look at the only thing that is concerning is the two things. Number one, NGX is trading way above its book value.
Okay.
Number two, the PE ratio is 20.04.
Okay.
The PE ratio is 20.04. Tells you is that that's a little, it's not undervalued really. But my point is, what are the opportunities that are available? More retail traders are coming in, and what that tells you is that the NGX is going to make way more. Am I recommending
more companies will be listed?
More companies. Many companies will be listed. But my point is, the point not about how many companies are listed, but how many retail traders are coming in, because they make money when you buy, when you sell, and all of that. So I will put it on a on a watch list actually. Not undervalued at this point, you know. But I think it is still something you can put on your radar.
Now let's look at the insurance stocks, and before then, let's lay a foundation for it. You see, we've always talked about the banking stocks and how they became so big because of policies, because of the government interest, and the rest of it. Now, are we expecting such in the insurance stocks?
So the insurance stocks. Okay, so so the insurance stocks. Okay, let me pull up a name so you see exactly what we're talking about. The first one we actually had talked about yesterday was we talked about name.
Yeah.
We talked about name. Name is actually one of those names that okay, so it's one of those names. If you look at this, if you look at, like, I mean, that's why I said you don't just look at, you look at category. The insurance index is actually down about 6.8% year to date. But the names, insurance names, there are some names, you know, like name listed, AXA Insurance, you know, these names have been a lot of cash. Look at, if you look at, this is 2026 to get 2026. Sorry, 2026.
2026.
Yeah. So yeah. So if you look at it, we are barely. It opened at 28. So we are barely. We are barely about a little above 10%. You know, for in terms of year-to-date performance. But what does that tell you? It tells you, look, you can see the run-up that we had in 2025.
Okay.
That tells you that we're going to have a lot of, and by the way, at this point, the insurance sector was not capitalized. Yeah. Now there's a lot of capitalization coming in. That's why I tell you. And by the way, if you see this as a technical trader, you know that this represents what? Accumulation. When you see a consolidation, a wide-ranging consolidation, that represents consolidation, which means that a breakout to the upside will actually clear this high and give and print some very decent returns on investment. Then we had talked about in the video about fundamentally name is the fact that a lot of underwriting discipline.
It's a good time, especially interest rate, to actually buy name.
So, but I told you, this is a high interest environment. We are sitting at over 26% in terms of NPR, and then 26.5, and then you are talking about, if that is the NPR, then of course the prime rate should be something north of 30%. If, I mean, the names like this can actually, when they collect the insurance premium, they just dump those the premium in fixed income assets, and that gives them 30%. Or even if they decide to go the way of treasury bills, that gives them a comfortable 21%.
So it means more business for them.
So that means more business for them, and because of their underwriting discipline, that means you don't expect them to think about paying out claims recklessly. So that is actually an arbitrage that they enjoy so much, and that should be able to give them a lot of resources to work with.
Okay.
So this is just an example to show you that even though the insurance space is suffering, but you have that some individual names, distinct names, have been making a lot of returns in terms of shareholder value.
Okay.
Not just in terms of dividend, but also in terms of return on equity. So name for me is actually one stock that I think people should actually put in their portfolio. Then there's another one also, Custodian. We think we talked about Custodian. So let's look at Custodian now. Let's look at Custodian. I actually had to add to this one today. I had to add to this one again today. I added to this one today. I think at the
look at the daily.
So this is the weekly, the daily chart. Okay. That's why I wanted to do the weekly, so it presents a better result. Now look at if you observe it. Now let's look at let's look at same
2026.
Same 2026. Look at this. Just watch this.
Okay.
So the opening price was around, if you look at this, the opening price was around
43.
And it's 78. If you do a very quick number there, you realize that you have this. It's very simple: 78 minus 43, and then you divide that by 43. That gives you 81.3% return on investment year to date.
Yeah.
And at a point it actually did over 100%. Okay. That you cannot categorize. Well, we remember we had talked about it earlier in the year. We talked about the prospects around Custodian, and I added to this name last week, 2 weeks ago. I think somewhere around here, and I've also added to it again today. Okay. This is what I'm looking at is, number one. Remember, Custodian is already, this is a company that is sitting on. I think the market cap is around 387 billion naira. This is a name that, when it comes to the consolidation, it's not likely to fail really. So I can afford to literally invest, because the challenge with the insurance sector, that why investors are still kind of sitting on their hands when it comes to insurance name, is because you don't know which one is going to stay. We don't know which one is going to be able to raise the 15 billion paid up capital. But I'm very certain of this name. I'm very certain of name. I'm very certain of Custodian and name. I'm very certain of AXA. Let us look at AXA Mansard. So let's look at AXA. I think because for me, I think this is, sorry. Okay, so I think if you look at this, so watch this again. Again, I had to add to this name too. Yes, I had to add to this name. So speaking a bit of fundamental here, this is actually a subset of a subsidiary of AXA. So they have access to global capital. Okay. Now, one of the advantages when you have access to global capital and you're working in a local environment, a high interest environment, means you can actually borrow at a very cheap rate. I mean, if you're borrowing in US dollars, let's say you pay 5%, you come into Nigeria with the relative FX stability, you can come into Nigeria and do
that advantage of an arbitrage.
That arbitrage is north of 18% now. Okay. So I mean that alone could actually give a lot of interest income. Okay. But beyond that, that exposure means reliability. We are having Dangote coming in, Dangote listing very soon. Foreign portfolio investors are coming into the country. Guess who they would want to work with? They want to work with insurance names that have global relevance, and so I think AXA Mansard is one of them. And I've added to that name, and I believe that we
what is their year to date?
So year to date, if you look at this, so year to date it's so it opened, so it's actually it's actually 13, and then now it's trading at 12.5. So I mean it's down. Like I told you, the insurance sector is generally down, except some names like we saw the Custodian that is currently over 83%. Okay. So, but is it a good time to? I would think this is a time that you can start accumulating. Do I believe that it will still come down? Yes, I do believe it will still come down, because as we begin to remember, as the deadline approaches, most of these names will have to, most of the insurance names will have to go to the market to do public offer. Now, there's what we call herd effect in the market. When I see names, insurance names doing public offer, most investors will not even look at the numbers. They will think that everybody is going on public offer. So they would want to really sell off some of their position in order to acquire, to get into some position. So that for me, but I think this is a strong name. If you look at the other name which we talked about, which is AXA Insurance. AXA Insurance, I mean, insurance at this point are not the best for people that, the people that are looking for green candles are not the best. But you know what? This is, you can see, what does this show you? Massive accumulation. Massive accumulation. Once this overhang is over, this is exactly, if you go to last year or to last year's chart for the banking stocks, you will see something similar to this, because at the point they were doing what they were trying to, before the capitalization came in, they were trying to, get themselves together, their acts together. This is exactly the same thing. So for me, this is 2024. This is the banking stock in 2024. Some of them do numbers like 114% and all of that. I, as any bank,